welcome again to the Contemplation Cafe. This is Paul, your host, inviting you to come inside, pull up a chair, and have a think or two. Today we're going to talk about auto insurance coverages, what they do, and also talk about discounts and answer the age-old question of, can you really name your own price? So let's start with the coverages. Now understand that some coverages are mandatory and some are optional. Remember, the golden rule, insurance is regulated by the state. So depending on what state you're in, your state will probably have something along the lines of, if your car has a license plate on it, it's got to have insurance. So here in Florida, for example, if your car has a license plate on it, doesn't matter if you're driving it or not, if it's got a license plate, it has to have a minimum of $10,000 of property damage liability and personal injury protection. That's it. Not a whole lot. So we're going to go through these. So first coverage is liability. Liability typically pays for damage that you do to other people and their stuff. Oh, better back up. Do the legal disclaimer stuff. Remember, this is all way up here. So because insurance is regulated by the state, you need to talk to your insurance people in your state to get the definitives. But this up here is good enough to get you going. Again, liability typically pays for damage you do to other people and their stuff. Has three components. First piece, it pays per person for bodily injury. So I'm going to use Florida, for example. Bare minimum in Florida, $10,000. Then there's a second piece of that. It has a per accident total. So in Florida, $20,000 maximum. And then there's a third piece, property damage. Now, pretty explanatory. Hitting other cars, hitting a mailbox, hitting a phone pole, hitting a car carrier, carrying Lamborghinis, any of that kind of stuff. So this is an idea of how it works. Now, if I blow through a stop sign, hit a car, and one person is injured, then it's going to pay up to $10,000 towards their injuries and whatnot, and then up to $10,000 for any damage I did to their vehicle. Okay, maybe that's okay for a little stop sign ding in the back bumper or whatever, but what if I blow through a stop sign and I'm busy doing this, and I hit a car with 4 people in it, and they're all injured, and the car's totaled. Oh, it happens to be like a Mercedes or something like that. Oh, price of your car. So my $10,000 per person is going to pay up to $10,000 for one person. There are 4 in the vehicle. 3 others are injured. So guess what? The other 3 of them going to split up the remaining $10,000. Not going to go very far if you take a visit to the emergency room. So what's going to happen after that is the thing called the trial lawyer is going to come sniffing around probably, certainly the other person's insurance company, and want to find out what assets they can grab a hold of to help pay for all the damage I did to their people. And then, of course, $10,000 property damage. So if it's a new Mercedes or a Lamborghini or a Maybach or whatever, after my insurance pays a paltry $10,000 to repair or replace their car, again, the other insurance company and or the trial lawyer is going to come after me for the rest. So stinkeroo on that one. Next coverage, mandatory in some states but not in others. It's called personal injury protection. You may also hear it called PIP, PIP, or no fault. The reason why it's called no fault is because it pays for your injuries whether or not you caused the accident. And again, that coverage varies by state and can vary very widely. So can't get into too much detail there, but basically there's some provision there. If you're injured in an accident, whether or not you caused it, there's money there to help pay for your injuries. In some states, there may also be some money available to pay for lost wages. For example, in Florida, where I am, there's a lost wage provision as well. But some states vary widely. The dollar amounts vary widely. So that's where you really got to talk to your insurance people. And I'm pretty sure if you live in a no-fault state, you know that you do. All right, on to this one's not a mandatory coverage. The rest of these are all pretty much optional. One we'll kind of get to at the end. It kind of is, kind of isn't. So we're going to go to medical payments coverage. So for the other states, you have medical payments coverage. Same kind of thing. If you're injured in an accident, there's a benefit there to help pay for your medical bills. Comes in very handy, especially as the claim process takes a little bit of time. But the medical billing people, Take no time at all. As soon as you're in there and they're scanning your bracelet at the hospital or whatever, those bills start racking up. So as the claim process unwinds, it's nice to have that coverage in place to help pay for those bills because the bills don't wait. Now, another one we do, optional, emergency road service. And that will help to pay for things like towing and locksmith service, jump starting dead batteries, delivery of gas or oil if you run out, can bring out a tire, doesn't pay for the tire, doesn't pay for the gas or oil, pays for the delivery and someone bring it out to you, but it helps address those things. Now, that's different. Now, there's another coverage, we'll get to that in a minute, that goes along with that. Not everyone offers it, so again, you got to check with your insurance company, but that's the emergency road service. Then we have car rental. So if your vehicle is not drivable because of a covered accident, helps to offset the cost of a rental car while yours is being repaired or replaced. Again, can be a dollar amount, can be a percentage of the cost of a car, depends on the coverage, depends on your state. So again, that's where you're going to check into that. There can also be a travel benefit to that as well. So if your vehicle is out of commission, out of state, then there may be some provision there to transport the vehicle back to you once repairs are done. Now we have 3 other ones here. We'll do uninsured motorist coverage first. So mandatory-ish in some states. For example, in Florida, it is automatically assumed by law you're going to have this, but you can sign a waiver that says, no, I don't want the coverage. So mandatory-ish. What uninsured motorist coverage does, it basically is liability in reverse. So if someone damages you and or your property and they don't have insurance, don't have enough, or it's a hit and run, then you've got some coverage there for your injuries and for property damage. Now in the state of Florida, there is no property damage feature to the uninsured motorist coverage. So in that case, we would look elsewhere for that. Some states, like Georgia and or South Carolina, they actually do have a property damage feature of those coverages. So that's kind of, and the deductible can be different. So otherwise, like in my state, for example, if I were damaged, my car, by an uninsured motorist, then we would look to my collision coverage, if I had it, to help pay for the damage done to my car, which also means I'm subject to my collision deductible, which is also no bueno. So now I'm stuck helping to pay for repairs to a car that I didn't damage because the knucklehead chose to not carry insurance. That's a whole other story. Now we come to the other 2 biggies. Comprehensive. Now in some states it's called other than collision because it's not collision. Fair enough. Comprehensive typically pays for those things that happen to your car when you're not driving. Vandalism, theft, falling objects, flood, fire, hurricanes, those kinds of things. Whereas collision typically pays for damage done to the car when you're driving it. Hitting an object, hitting another vehicle, if you're driving, lose control and flip the car over, those kinds of things. Both of those tend to come with a deductible, which if you're already paying health insurance, it means money out of your pocket comes first before the insurance company starts paying. That's how that works. So those are your coverages at a glance. There are other coverages that are out there like funeral benefit and loss of sight or dismemberment, things like that. So check with your particular insurance company because not all of them offer them and see what else is out there. Remember, this is about the unplanned, the unanticipated, the things that you don't have the wherewithal at hand to pay for when life happens. So that's what insurance is. Remember, it's an overall piece of your wealth management strategy. So it's not to be taken lightly. Some people out there, because I've heard them, just give me whatever to make me legal. Well, yes, insurance does have a legal component, but it's a whole lot more than that, Dexter. So you kind of need to sit back and let someone school you on that. Again, I don't care who you have insurance with. When you have these kinds of questions, what do I need? What's my exposure? Can I do this better? You need to ask the hard questions, and they need to answer them for you in a way that you can understand, and make them keep answering it. So if they tell you the first time, well, it's on a full moon, only on a Tuesday, caused by a wildebeest, and you got questions about that, then you need to keep asking questions and make them explain it to you in a way that you understand. Remember, you have the checkbook. That makes you the boss. You do not work for the insurance company. They work for you. So just like you hired them, when you handed them your premium check, you can fire them and go get somebody else. But remember, though, you better hire the other insurance company before you fire the one you currently have. That causes a whole other set of pain and suffering that you don't want. That being said, again, these are your coverages at a glance. Let's go to discounts. Discounts are interesting. So we had talked previously about underwriting and the law of large numbers and things like that. So discounts, everyone offers something different, are just that. So they talk to the number crunchers, the actuaries behind the curtain, and they say, we'd like to offer a discount. Might we be able to do X? And then the actuaries will go and run those numbers, and they'll say, well, for sample sizes of 100, 200,000, 500,000 drivers with these characteristics, it does show that, yes, they tend to have less accidents, or if they had one, it costs less money. So yes, this discount is justified. We can do it. Or no, anything that's painted ticket getter red does not get a discount. Something like that. But that's how that basically works. They have to justify that. They can't just go handing out discounts. So, and then some discounts are conditional. And unfortunately, we do see commercials that try to woo you in with discounts. Many companies might give you a new business discount or a welcome to the company discount, and those are going to disappear after the first 6 months when that renewal comes around. So don't get used to that. They just throw that out as a way to get you in the door. Some companies go really crazy with discounts too. I've seen it on TV. Hey, I walk upright, you get a discount. I have opposable thumbs, you get a discount. I use simple tools, you get a discount. And then 6 months later, they all disappear. Then they're calling around going, man, my insurance just went sky high. What's going on? Well, how long have you had insurance with Joe Schmo Fly-By-Night? Well, just coming up on 6 months. And they gave me all these cool discounts and they all went away. Yeah, congratulations. Sorry about that. That's how that works sometimes. So don't get pulled in by the discounts. And again, too, we're going to go with endorsements as well. When you see on TV, they talk about things like a vanishing deductible or new car replacement. Okay, in the fine print, that's not a standard auto coverage. That's not a discount. That's none of that stuff. It's called an endorsement. That means you have to pay for it. It's a benefit you have to pay for that you may or may not actually use, but you got to pay for it. It's additional, not all part of the auto coverages. So, and there are certain criteria that goes along with it. It's not available in every state. Again, sometimes they do a national marketing campaign and you're going, hey, the Talking Emu said that I can go get this. Well, no, or the Gecko or the whoever. You need to go ask and check. Look at the fine print, which flashes by so fast. But that's the deal. It's not available in all states, and it's not part of the standard auto policy, which means you're going to have to pay extra to get that. So again, if you're enticed by those, that's the curiosity approach to get you to come in. Ask the hard questions and make them answer them for you. Don't let them squirm and whatever and try and get out of it. This is your hard-earned money we're talking about here, right? So you're the boss. You have the gold. You make the rules. You need to make them answer those questions. That being said, let's go answer this incredible question. Can you really name your own price? Can you really pay for only what you want? I'm going to go back to an old TV show. Survey says, no, you can't. And here's why you can't. So remember, A, insurance is regulated by the state. Number two, depending on your situation, there are certain coverages you have to have. So you don't get to pay what you want. You can't name your own price. If you could name your own price, we'd all say a penny and we would get insurance. And that just doesn't work like that. So no, you can't name your own price. You can't pay for what you want. So like I said, for example, if your car's got a tag on it, got to have some insurance on it in most states. So congratulations, you automatically have to pay for something you probably don't want to pay for already. Number two, if your car is financed or your car is leased, you're going to be required to carry comprehensive and collision coverage on your vehicle because the finance company, in the case your car is damaged, wants someone not named them to pay for it, which means you and or your insurance company. So congratulations, once again, you can't just pay what you want or name your own price. So don't be pulled in by that. Again, those things are just a curiosity approach to grab your attention, suck you in, to get you to jump companies. You may be very happy where you're at, but no, you can't just pay for what you want. Like the old song says, you can't always get what you want. So you can't just pay what you want. You can't name your own price. If that were the case, every insurance company out there would give insurance away for a penny, and we'd be happy. The insurance companies would all go broke. So no, just that's wrong. Not going to happen. All right, so thanks for stopping by the Contemplation Cafe, and we will pick it up next time with some more interesting questions about auto insurance.